Stocks are set for a slightly lower start despite overnight gains on Wall Street, with all eyes on the release of a barrage of service sector purchasing managers indices from around the world, including the UK, Euro area and US. Ahead of those numbers, the FTSE 100 is expected to see a 15-point dip at the open to 7,726. Commenting on the situation in markets, Michael Hewson, chief market analyst at CMC Markets, said, "It would appear that with all the uncertainties reverberating around the globe from Trump ruffling feathers at every turn, concerns about tariffs, political noise from Italy as well as the situation in North Korea, investors are choosing to focus on what they know, which is company earnings, economic data and the outlook for fiscal policy for central banks. It's all well and good jumping at shadows, but until that shadow turns into something more tangible, the reflex reaction appears to be buy the dip." Perhaps most important of all, markets will be watching for any headlines out of the latest round of talks which are due to kick off today between Brexit negotiators and officials in Brussels. According to Bloomberg, on Monday British business chiefs told the Prime Minister to get on with taking key decisions on the UK's exit from the bloc. One of the attendees said the regularly scheduled meeting at Downing Street was positive and had gone on for longer than expected, with business leaders pressing the government for clarity. Against that backdrop, IHS Markit's UK services sector PMI is scheduled for release at 0930 BST, with investors keen for a better beat on the extent of the bounce back in activity levels in the British economy after the weak start to the year. Earlier, the same survey compiler is due to release its Eurozone Services PMI at 0900 BST, with the Institute for Supply Management's US Services PMI set to follow at 1500 BST. Overnight, the British Retail Consortium reported a 2.8% jump in UK retail sales for May on a like-for-like and year-on-year basis. Building for the future on Monday evening, the government sold a 7.7% stake in RBS, with the Chancellor billing it as an important step forwards in putting the great financial crisis behind us. The renewables infrastructure group, TRIG, said it had bought 2 onshore wind farms in northern France for roughly €28 million. The wind farms are currently being built and expected to be operational in the fourth quarter of 2018, when they will have a combined operating capacity of 31.8 megawatts, TRIG said. Once the projects are operational, TRIG will have 140 megawatts of generation capacity in France, which is 15% of the existing portfolio by capacity. St. Maudwin Properties updated the market on its trading for the period to the 31st of May on Tuesday, saying that in the past 6 months it continued to focus on delivering against its 4 strategic objectives of portfolio focus and capital discipline, accelerating its commercial development activity, grow its residential and house building business, and cement and grow its regeneration reputation. The FTSE 250 firms said that, despite continued uncertainties in the external environment and challenges in parts of the UK property market, the outlook for its 2 key sectors, industrial, logistics and regional house building, remained positive. Given its extensive land bank and the opportunity to recycle capital out of its existing assets, St. Maudwin said it was well-placed to accelerate the delivery of its substantial pipeline using its own resources in the years ahead.